Wall Street's post-election rally pauses ahead of the release of the CPI data for the month of October. Asian markets have also opened with cuts, while the GIFT Nifty is also indicating a lower start for the Indian markets. Crude prices remain near two-week lows, with Brent around $72 a barrel after a 5% drop since last Friday. A stronger dollar also pushes gold prices to a two-month low around $2,600 an ounce. Food delivery and quick commerce player Swiggy will list on the exchanges today after its 11,300 crore rupee IPO. The issue saw muted demand and was subscribed 3.6 times. Inflation spikes to a 14-month high as vegetable prices soar, goes beyond the RBI's upper tolerance band of 6%, while industrial output expands by 3.1% in the month of September after a contraction in August. And US President-elect Donald Trump announces the formation of a Department of Government Efficiency, which will be headed by Elon Musk and Vivek Ramaswamy. The department will work outside of the government with the objectives of dismantling bureaucracy, slashing excess regulation and wasteful expenditure, and restructuring federal agencies. Trump has also announced John Ratcliffe as his pick for the director of the CIA. Good morning. You're watching Power Breakfast on this penultimate trading session of this truncated week in the Mumbai News Center. I am Hormas Vatakia. Let's take a look at how the Asian markets have started off this morning, and it is red across the screen. Even in the Asia Pacific, most of the markets continue to trade with losses this morning. The Hang Seng is down 0.8%. The Taiwanese index, which was an underperformer yesterday, also is below the flat line, but the losses are coming in from the Japanese markets. 1.25% down for the Nikkei. The Shanghai Composite is the only outlier, though. It's trading with gains of around 0.3%. The South Korean index, which is the Kospi, is also down 1.5%. So most of the Asian markets have opened with cuts. Pull up the GIFT Nifty as well, and that will give you an idea of how our own markets are likely to start off. And after yesterday's session, where the Nifty fell over 250 points, the implied open is suggesting another 70-point downtick for our own markets. And that comes on the back of a weak handover from Wall Street, as well as the post-election rally over there took a pause. The Dow Jones fell nearly 400 points, retreating from record levels, and the S&P 500 and the Nasdaq, both of them closed below the flat line. Now, the key components of the so-called Trump trades were among the most notable losers, among which Tesla, of course, fell 6%. After having gained about 30% since election day, and investors now await the CPI and the PPI readings that will be released later today. The economists surveyed by the Dow Jones are expecting inflation to increase 0.2% for the month. Now, as the U.S. awaits Donald Trump's comeback as president, the next big question is whether the U.S. central bank, the Fed, as we all know it, is at a risk of losing its independence. Let's listen into what former Fed officials Robert Kaplan had to say on this.
I think having an independent central bank is very critical to the United States and to any country. And I would like to believe that the Fed will continue to remain politically independent, and that would mean allowing Jay Powell to finish out his term. So any president or elected official, or citizen for that matter, has the right to have a say about Fed policy. The issue for the Fed is you want to be able to make decisions without regard to political influence or political considerations. And so the Fed's very used to people on the outside commenting, the president even at times commenting. We saw that from 16 to 20, and they'll be able to manage that.
Let us now get to the final update on our global market wrap this morning. The European markets also ended Tuesday's session sharply lower as investors assessed what US President-elect Donald Trump's return to the White House could mean for the region's economy. The French CAC ended 200 points down. The German DAX lost more than 400 points. The FTSE also ended 100 points in the red. The Pan-European Stock 600 index provisionally ended the day 2.1% lower, posting its biggest single-day decline since early August. Well, that's the global market action that we have for you. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, Vinny is here to get us all the market cues we need to watch out for today. Vinny, good morning. Another disappointing session yesterday, but what's the setup looking like this morning?
Absolutely disappointing session that came in yesterday because Nifty closed below the 23,900 mark and it was almost near its 5-month low level. 44 stocks out of the 50 Nifty 50 stocks actually closed in the red, and Britannia, BEL, NTPC among the top losers. Nifty Auto, Nifty PSU banks, top sectoral losers that we saw coming in. FIIs, they was also continued to sell even in yesterday's session, while DIIs continued to be a net buyer of around 1,854 crore rupees. What are we watching out for today? Now, obviously, we had the CPI data that came in yesterday for the month of October. That jumped to a 14-month high at 6.2%. While in terms of the IIP, that grew by growth was at 3.1% in the month of September. So keep an eye out on that. Inflation data will be something that we're watching out for in terms of the reaction coming in for the market. While domestic earnings, a lot of earnings that are expected to be reported today. We'll have Eicher Motors that's going to be in focus, Apollo Tyres, Vodafone, Torrent Power among some of the important names that we're keeping an eye on. So a lot of earning movers yet. That's something that we're watching out for. And we'll have Swiggy that is getting listed on the D Street today, as well as Acme. So listings on the IPO side, that's something that we're watching out for. As of now, trade setup looks like that, Indian markets are expected to see one more day of subduedness, and Nifty implied open also indicating a bit of a negative start for the Indian markets. So keeping an eye out on that.
We'll keep an eye out if support comes in from the lower levels. Vinny, thanks a lot for that. Over to Upasana now. List out the stocks you need to watch out for. Upasana, good morning. What's on your list?
Good morning, Hormaz. First up, let me start with Bosch. The company's reported an operationally healthy set of numbers. EBITDA up 14% and margins also expanded by 100 basis points on a Y-on-Y basis. Next up is Nykaa. Company's reported a good set of numbers. Revenue stood at 18,074 crore with an uptick of 24% on a Y-on-Y basis. Now, Repco Home Finance also reported a good set of numbers. NII stood at 176 crores with an uptick of 1.7% on a Y-on-Y basis and 0.5% sequentially. Company's asset quality ratio also improves at 3.96% GNPA versus 4.3%, and mind you that the asset quality is best in 14 quarters. Next up is PNC Infra. The company's reported a weak set of numbers. This is mainly due to weak execution seen during the quarter. Net profit down about 44% on a Y-on-Y basis, and revenue also took a hit of almost 25% on a Y-on-Y basis. Next up is MedPlus Health. Companies reported a strong revenue growth and operationally strong set of numbers. Revenue up 12% on a Y-on-Y basis, and margins also expanded from 6% to 7.9% on a Y-on-Y basis. BSE has also reported a good set of numbers. Revenue stood at 746 crores with an uptick of 23% sequentially. This top-line growth was mainly led by transaction charges and services to the corporates. Tata Chemicals will also be in focus as company's wholly owned subsidiary, Tata Chemical Europe, to invest 655 crore to build a sodium bicarbonate plant in UK is what the company has indicated. And lastly, PNB Housing Finance will also be in focus as, according to sources, Quality Investment Holdings, which currently holds 20% stake in the company, is likely to sell stake in PNB Housing, and the offer price is set at a discount of 4.25% to yesterday's closing price. So all in all these stocks will remain in focus today.
Upasana, thanks a lot for that. And finally, Mangalam is joining in with cues from the F&O space. Mangalam, good morning. It's a big day for the markets. What is the setup looking like on the F&O side?
It's a big day, but what happened yesterday was a brutal sell-off. We saw all the indices actually end at low point of trade. For the first half of the day, we were absolutely okay-ish, meandering around the flat line. Thereafter, it was the second half where there was accelerated selling. And a large part of that could also be attributed to sharp sell-off in the financials. It was Nifty weekly options expiry yesterday. And if you notice, at around 12:30, when we were talking about 23,800, having a lot of put writers, support coming in, once that was broken, thereafter, it was only all the way down. And because of the overlaps that we have on the Nifty Bank and other indices, we saw a big decline as well. By the end of the day, when we got the data coming in from the FIIs and DIIs, the FIIs selling notched up a little bit, the DII buying notched down a little bit, as a result of which the net institutional flow gap increased, and that caused a big decline. If you look at the net institutional flows, the FIIs minus DIIs, yesterday increased from 280 in the previous trading session to about 1,200 odd crores. Add to that, the FIIs who had stopped selling in index futures have re-begun their selling in index futures. Yesterday, the selling was close to around 7 11,734 crores, added at about 11,500 short contracts. And with that, their net long exposure is now down to 24%, with net exposure down to 1.85 lakh contracts itself. What are the options suggesting in terms of a range for the frontline index? On the way up, 24,150, which was an earlier support, will be a bit of a resistance. And at the lower level, we'll watch out for some support coming in at 23,850. That's where the put writers are active. If the market has to bounce back, it would have to be from these levels itself. Why is that? Because the Nifty's recent lows over the last few trading sessions, if you look at it, have been between this 23,800 to 23,850 sort of zone itself. The put-call ratio at 0.72 indicates near oversold zones for the market itself. And if we break through that, then perhaps we have the 200-day moving average to look at on the Nifty. It is the Nifty Bank weekly options expiry today. Keep an eye out on that.
Indeed, it's the weekly options expiry of the Nifty Bank. We keep an eye out on that. Mangalam, thanks a lot for that update. Time for a short break. Up next, food, delivery and quick commerce player Swiggy will be making its debut on the exchanges today. More details on the other side. Stay tuned. Welcome back. Time for the big stock market debut today, and that comes from Swiggy after its 11,300 crore rupee IPO was subscribed just around 3.5 times. Mangalam is here to tell us more. Mangalam.
Well, we all know Swiggy, the business that it does, Instamart, as well as the prospects that there are. So I'll spare you the details on the financials. For the listing today, it's just three most important things to watch out for. One, the subscription was slightly tepid. For an 11,300 crore IPO, it wasn't fully subscribed by HNIs, just about subscribed by the retail, and it was the QIBs that led the issue through. So overall subscription was just about 3.5 times, and that will weigh in on the way it opens. That brings me to the second point. We have always compared Swiggy with Zomato, and the fact that you trade at a discount to Zomato. How much would the discount be is something that we will discover today. At the issue price of 390 rupees, the discount to Zomato's valuation is close to around 60%. Some believe that it's a lot more than what the street would have factored in. So if the stock opens with a premium, we'll watch out for levels. At what level does it, narrow the discount to Zomato? And if it opens with a gap down because of tepid subscription, then we'll look at, again, this discount with Zomato. So at 350, it would be trading at a 63% discount to Zomato's valuations. At 500, it would be trading at a near 50% discount to Zomato's valuations. That brings us to the third point. Where does the company go from here? When we spoke to the management during the IPO, they said they may look to open around 1,500 dark stores in the next 4 quarters. Growth driver for the company would be quick commerce, but the margin driver for the company would be expansion in the food delivery margins, which is currently at around 0.8%. The industry has potential of almost 5%, a level that the company believes it can cross in the next couple of years, 2 to 3 years. So all these factors in place, all set for Swiggy's listing.
All set for Swiggy's listing. Mangalam, thanks a lot for that. From one big IPO to another, some flashes on your screen. NTPC Green's 10,000 crore rupee IPO will be opening on the 19th of November. The price band has been fixed between 102 to 108 rupees a share. We'll get you more details through the course of the day. Moving on to some macro data then. India's key inflation data, the consumer price index for October stood at a 14-month high, marked by a significant uptick in its food inflation. While India's industrial production reading for September rebounded, Latha is joining in with more on the macro data.
Yes, that's right. It's a nasty inflation number at 6.21%. Our own poll was 6, which was on the higher side. The number at 6.21 is at the higher level of our range. We had quite a few readings at 5.9 as well. The biggest culprit, obviously, food at 10.87%, pulled up by vegetables at 42% year on year. But, if it was only vegetables, we could have taken it as a one-off. The point is, edible oils are also up about 9%. That's because the tariff was hiked. As well, cereals have come in at about 7% higher year on year, 6.94 to be precise. Month on month, there has been a 1% rise in cereals. When if it was such a good Kharif and such a good Rabi expectation, what explains the rise in cereals? All this indicates that food inflation could be a little more sticky, even if the biting vegetable inflation recedes in the month of November and December. There is a problem for the Reserve Bank as far as food inflation is concerned, because it doesn't respond to interest rates. The core inflation at 3.7 also indicates that we've moved a distance from the 3.1 that it was earlier in the year. And that also could inch higher. All told, it's an uncomfortable combination for the Reserve Bank. It will move off towards the 5% mark in November. because of the base effect and because of the fall in vegetable prices. But this is the last number for the Reserve Bank as it goes into the monetary policy. And therefore, we should expect that the Reserve Bank brings this into the full year forecast. The full year forecast stands at 4.5 for the Reserve Bank. They may be forced to raise it arithmetically to at least 4.7 or 4.8. And when you are raising the inflation number, you can't sound dovish. So that is a given now that the Reserve Bank's rate cut expectations, if any, gets pushed to February. The IIP number is very good at 3.1%, manufacturing at 3.9%, but that's a small part of the GDP. Nevertheless, for the July, August, September GDP number, which comes out on November 29th, the inflation number, the IIP number will not move the needle much. There, the bulk of the expectation is that we will get a soft number of about 6.5 or 6.6% growth for the second quarter. But that, of course, we will know on November 29th.
Lata, thanks a lot for that update. Now on to a CNBC TV18 exclusive. Then the agenda of the government's review of the direct taxes laws will not include changes to tax rates. Sources are telling CNBC TV18 that the government is also undecided on whether any changes to tax laws will be actioned through amendments or a whole new act altogether. Timsi Jaipuria is here with more. Timsi, what is on the government's agenda?
As government is currently conducting a comprehensive review of the direct tax laws, sources tell CNBC TV18 that the review is likely to focus on easing legal hurdles and reducing the litigation burden for both the government and the industry. As part of the review, sources indicated that the Revenue Department is currently focusing only on easing the language and it is not in favor of changing any rates. Also, sources shared that the review of the existing Income Tax Act 1961 is to look at easing certain penal provisions and cutting down litigation. To conduct this review, remember, the Central Board of Direct Taxes had formed an internal panel which is right now considering to providing clarity in provisions via simplified interpretations. It is also understood via sources that the panel is also in favor of adding FAQs for absolute clarity in assessing the provision's intent for both taxpayers and the officers. However, whether the review will be presented in a form of a new act or will it be moved via bringing in certain amendments, that is something that the government has not yet decided. Apart from this, sources indicated that the review may result in major easing in the provisions of TDS, TCS, capital gains, clarifying on issues like taxpayers' classification, income sources, etc. And the aim of the government is to present these findings of the review committee and the proposals from the direct tax laws review in the upcoming budget 2025 in February. Let's see what will the review finally unveil for the taxpayers, something that we'll have to wait and watch for. Back to you.
Timsi, thanks a lot for that. Time for a short break. Up next, we get you cues from the commodities market. Stay tuned. Back on the other side. Back with us here on Power Breakfast, and Manisha Gupta now joins in with updates from the commodity space. Manisha, good morning. Gold prices continue to correct, but what else is on your list?
Oh, well, most of the commodities hormones have come to see a bit of a decline. That is because of the US dollar index, which is now trading at around 2-year highs, is absolutely not doing well for many of these commodities. But I'll start with gold, yes, because we've seen a 90 of an all-time high. It's trading at 25.90 or thereabouts right now. So it has been nearly, $100 plus kind of a decline. Almost $200 actually of a decline. So that's a 2-month lows coming in for the gold prices. Also, the U.S. Fed may delay easing cycle in 2025 is what is bothering the gold and silver prices both. Not just that, when you look at the metal prices, they have extended declines as well. Aluminum is now trading at a 4-week lows. We've seen 3.5% decline on week basis on that. Zinc is trading at around 6-week lows as well. We've seen 5.5% of a fall on that one also in the previous 1 week. And copper is now trading at a 2-month lows. Silver price is also trading at around 2-month lows right now. The only thing that seems to be doing slightly better is the crude prices. Crude fell 5% in last 2 trading sessions, and we've seen some support come in for this one. But OPEC cutting 2024 global demand for a 4th time this year doesn't really give too much of a support to the prices. And if the dollar index continues to run up the way it is, now trading around 106, you could perhaps be looking at further pressure coming in for many of these commodities.
The green of the dollar keeping most of the commodities in the red. Manisha, thanks a lot for that update. Moving on to some assembly elections now. The first phase of polling in Jharkhand gets underway with polling scheduled across 43 constituencies. The second phase is scheduled for next Wednesday, that is the 20th of November, in the remaining 38 constituencies. The counting of votes will take place on the 23rd of November. Moving on to some international updates, and President-elect Donald Trump continues to be in the news as he's announced the formation of a Department of Government Efficiency, or DOGE, as he moves to assemble his team ahead of taking office in January next year. The Department of Government Efficiency, which will work outside of the government with the objectives of dismantling bureaucracy, slashing excess regulation and wasteful expenditure, and restructuring federal agencies, will be led by Elon Musk and former Republican presidential candidate Vivek Ramaswamy. Fox News anchor Pete Hegseth has been nominated as Trump's Secretary of Defense, while John Ratcliffe, the former director of the National Intelligence, makes the cut to be the next director of the CIA. And that's all we have on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call up next to set you up for today's trade.